All right, Ripple XRP holders. So a massive earthquake about to hit, according to an analyst at Wall Street, with XRP sitting at 53 cents. How would that impact the price of XRP post lawsuit? Because XRP really hasn't done anything other than that little pump up, barely making it to $1, coming back down to 53 cents, pissing everybody off that was expecting the world out of this $28 billion market cap project. And then Bitcoin sitting at $517 billion, sitting at 26,000. So what's about to happen next on the XRP price chart? I want to get into in this video as we see XRP rally over the past 24 hours. The next move will shock you. So here's what we're going to cover in this video. We're talking about $145 trillion worth of liquidity to flow into the digital asset space, and how much of that will flow into XRP will be determined based on this. What I'm going to share with you in this video is going to be really powerful. So comment 777 if you're feeling blessed, comment 777 if you're feeling bullish. We're going to be talking about the stock market compared to XRP. When we look at something like Apple or we look at something like Microsoft, it's being compared to those companies in the early stages. When we saw the dot-com boom and the dot-com bust, and we saw over 300,000%, for a company like Apple, and what, over 300,000% for Microsoft, XRP, that would put, if we were to see a 300,000% for XRP, that would put it roughly around $9 or $10. So is that possible? Well, let's discuss it based on what's going to happen next with Bitcoin. So comment 777 if you're feeling blessed. If you're feeling bullish, let's run it. All right, bull runners, welcome back. So the entire crypto market has over $1 trillion worth of liquidity in the market cap with 1.8 million cryptos. Obviously, the majority of these cryptos aren't going to last, but the ones that do are going to absorb the vast majority of the liquidity from the derivatives market, from the stock market, from institutional money coming in. In a report from Northern Trust in collaboration with HSBC says that this figure could still rise exponentially, and a Wall Street analyst has suggested that XRP is the coin to buy to take advantage of this growth. Now, I'm not saying to buy XRP, don't sell XRP. It's all education, entertainment purposes only, but digital assets to account for 10% of global assets, according to this report, by 2030. That means that the market could be valued at over $14.5 trillion in crypto, since these financial firms also project that the global asset market could rise to as high as $145 trillion by 2025. And this right here on the northerntrust.com website in their PDF, in terms of the case study with tokenized portfolios in wealth management with ETFs and mutual funds, would typically allow investor access to a whole investment universe through smaller ticket sizes. However, these fund structures do come with their costs, and they do have their own process right here. But one of the processes that they're breaking down with portfolio manager, liquidity provider, and market maker through tokenized exchange, talking about money market funds, and then through a smart contract, and then digital asset custodian on an example like a public blockchain like Ethereum. So Ethereum is going to see some massive moves, and we've seen some charts and some breakdowns of this from massive banks on their annual reports about how they're going to be using distributed ledger technology, tokenization, carbon credit, net zero. You see gold, liquid assets, fixed income funds, private assets. So this is very cool to look at. I know obviously this might be confusing on how this might work for you guys, but one thing we need to look at is understanding the trends, understanding liquidity movement, money movement on this planet, where it's going to be shifting over the next decade, and how to position yourself so when you're in doubt and you're feeling fear or pessimism or impatience about a company like Ripple or XRP because it hasn't gone to the moon yet, then you could zoom out on your macro market view and know what's going to happen next, because this growth is going to be caused by obviously stable coins, central banking, digital currencies, and other innovations in the digital economy, in the digital asset space. And approval of spot Bitcoin ETFs is going to be one of the major catalysts that will grow this market. And Linda P. Jones says that yes, 14.5 trillion is a big number, but you compare that to something like gold, it's relatively small for this whole industry. So you own a very valuable asset. You are early, you're not wrong. And there's a question: if you knew that you owned Microsoft or Apple stock, would you be in a rush to sell it in the early days?
Why they don't want you freaking involved in this digital asset space. Northern Trust working together with HSBC. If you're not too familiar with who Northern Trust is, let me just fill you in. Northern Trust is one of the largest banking institutions in the United States and one of the oldest banks. Okay, let's Let's just take a second and look at what they have to say. The rise of a new asset class. DLT and tokenization have the potential to reshape financial markets by creating new asset classes and enabling new business models, both of which will accelerate change. And then if we scroll down here, this is what's really going to blow your freaking mind. Asset servicers know that they are operating in an evolving world. We expect that by 2030, approximately 5 to 10% of all assets will be digital. Considering that global assets are expected to rise to $145.4 trillion by 2025, this is a substantial number, and it will only continue to increase as technological innovation drives change. So let's just do 10% of $145 trillion. Okay, you guys can see that number right here, right? Well, let's just subtract 10% from that. That is $14.5 trillion. You all see now why they don't want you involved? Again, this isn't make-believe from me. I'm not making these numbers up. This is information that's put out by one of the largest financial institutions in the United States. Think about it, ladies and gentlemen. There's something brewing behind the scenes that I feel like a lot of us can't even fathom. And this, again, is why they don't want you involved. They know, it literally says right here, they know, asset servicers know that they are operating in an evolving world. They know that this is coming. Pay attention to detail.
So in Linda Jones' opinion, XRP holders could potentially earn huge returns when Northern Trust projections become a reality. And it's like holding, Microsoft or Apple stock in the early stages. Because when you take a look at these companies, Microsoft stepped onto the scene in 1986, and the price of Microsoft surged well above $300. And Apple's journey began in 1980. And so when you see 40 years later, we're talking about XRP just getting started here. And so Ripple's possible public offering as well too. The industry analysts are suggesting that XRP could potentially follow a similar path to these tech companies. Analysts are speculating that XRP might achieve a double-digit value in the years to come. Now, this is obvious speculation here, but when you look back to Microsoft in 1986, boasting over 387,136% to up to $333. That's absolutely insane. And so is it possible for Ripple to do something like that? Even with Apple, 381,000% for a company like Apple. Well, one thing that's interesting to note is through the entire lawsuit process, XRP stayed not only in the top 10, but in the top, in the top 5. Pretty much. It was just battling between USDC. And comparing this to Cardano, the next one in line, XRP has $28 billion market cap. Cardano has 9.3 billion. So Cardano can't even come close. So it's really a race between Bitcoin, Ethereum, BNB, and XRP. And the only reason why BNB is above XRP is because that's on the Binance Smart Chain, and BNB is used to trade for other altcoins. So BNB is just an altcoin currency right now that's used for liquidity for other projects, whereas XRP is that banking liquidity currency that will be used for international banking. So basically, in order for traditional banks to be able to compete in the digital asset space, they need a cross-border bridge currency, just like in the crypto space. In order for exchanges to compete, they need a cross-currency, an altcoin currency bridge token. That's why BNB is that for an exchange token, because when you go to markets on BNB and you look at it, BNB to USDT, BNB to Bitcoin, BNB to Ethereum, BNB to TRY, BNB to TRX, BNB to all these currencies. There's 476 pairs, on the Binance Smart Chain for this. So if people are planning on trading from one altcoin to another, then they would use something like a BNB XRP. But for banks, if banks want to be able to trade overseas with different currencies, they're going to need that cross-border bridge. And that's what exactly is Ripple with XRP is doing. And so should you buy XRP while it's below 60 cents? That's a good question, because Judge Torres, disagreed with 2 of the SEC's 3 complaints. And so this lawsuit is still going on. She allowed one motion to move forward to a full trial. So in essence, she ruled that Ripple should be treated as a security. Well, XRP should be treated as a security only in the hands of institutional investors and not when less sophisticated investors are involved. So people like you, like I, we're retail traders. We're not institutional billion-dollar whales here. Yet We will be soon, camping on the beaches of the moon, but we're retail right now. So if you're dealing with less than $1 billion, or you're just dealing with a few million or a few $100,000 or a few thousand or even a few $100, then you're retail. So why XRP's big jump didn't last is the ruling made it clear that this was not the end of the legal process. All 3 rulings are open for appeals. It would not be surprising to see the wheels of the courtroom machinery grind all the way up to the Supreme Court over the next few years. But nonetheless, it will end in Ripple's favor. It's just the SEC is doing whatever it can to make sure that retail people do not get wealthy. So they're trying to drag this out as long as possible because it's obvious that the US dollar is going down in value, and countries like Brazil, Russia, India, China, South Africa, and other countries are trying to figure out a way to escape the hedge money of the US petrodollar. So what lies ahead for Ripple and XRP? Well, the final irrefutable end of the appeals outcome of the case should influence the government's long-term framework for crypto policies. And so what that means is Judge Torres' review appeared to support separating the crypto sector into 2 camps. Number 1 would be security like coins that should build value like a stock and be registered as a security with the SEC, and currency like coins used as a tool of the trade. And so far, XRP falls in the second group, powering a digital payment network. Now, a lot of people argue that banks don't need XRP for their CBDCs, but they would use Ripple's technology, which is separate from XRP. But once they realize that XRP makes things a lot more efficient and cost effective for them, then they'll start to accumulate more of it. Now, why else is XRP not growing regardless of the lawsuit still dragging on? Well, it's because of liquidity in the market and investor sentiment based on the Federal Reserve. So if we're looking at Bitcoin's chart right here in terms of, selling pressure versus buying pressure, recently there's been a lot of selling pressure. That's why on the relative strength index, we're sitting at 28 right now on the RSI. The last time that we were there was March of 2020. Now, I don't think we're at that type of catastrophe type situation for Bitcoin. It just shows that the price has sold off relatively quickly compared to what it's done recently. And so where we could be compared to, I guess you could say, based on the 2019, little bull market that happened from December of 2018 up to the peak of June of 2019. And then we saw this sideways trading action until October of 2020, we could be compared to right here because of the 200 moving average. So when Bitcoin rallied upwards of $14,000 and we saw it consolidate sideways, a lot of people thought that this triangle formation right here, this symmetrical triangle was going to break to the upside and Bitcoin was just going to keep going up from here. But the break to the downside was very clear that a retest of the 200 moving average, when it broke below it, it was going to be a tough journey to get back above it. We saw it happen one time here in October of 2019. It closed above it, but it couldn't hold the 200 moving average and it struggled to regain it. This period right here where Bitcoin went drastically below the 200 moving average and tried to come up again, then the black swan event of COVID hit and we struggled to stay above it for any extended period of time until April of 2020. Once April of 2020 hit and Bitcoin broke above the 200 moving average and held it for an extended period of time, if I were to measure this out for you guys, it held it for over 80 days, then over 90 days. It was very clear that we were out of this economic catastrophe and monetary print orders is what was going to cause crypto to go to that next level. So something similar could play out this next cycle where, a catastrophe sears, which is what Bill Gates is planning. Joe Biden said this. I said this in previous videos, but I'm repeating it for those of you that are brand new to the channel and you're subscribing right now. But some other catastrophe is what could cause a dip scenario like this to take place. Now, it doesn't mean it'll happen, but another catastrophe could cause that. So we are either, in my opinion, looking like this on the chart or we're looking something like this. I would rather, if there is a catastrophe situation, for us to dip down to, $14,000, $15,000, $12,000 per Bitcoin, or, maybe come down to the previous low to form a double bottom. I would rather get that over with quick. Just get it over with now rather than the scenario being something like this, of Bitcoin rallying up above the 200 moving average, crashing below it, and then taking until middle of 2024 before we start to break out for the peak of November of 2025. I'd rather get it done with fast. If there's going to be a catastrophe, lock down the economy tomorrow. Everyone go get your toilet paper as quickly as you can, and then let's go to the beaches of the moon sooner. Because when we look at the RSI right here, compared to when we dip down below, I feel I feel honestly that it might be the later. It might be something coming in 2024 because the Fed will have to pivot on their balance sheet and start adding onto the balance sheet when or if there is some economic catastrophe. That's when the Fed would start printing more money. And so we're more than likely right here in this situation where a rally up to the 200 moving average, if we rally up to it, getting rejected from it, then testing it again, trying to break above it, and ultimately some type of fake out situation, whether it's a V-shaped recovery, a W-shaped recovery, or whatever it is, how low this next dip will be for Bitcoin, because the selling pressure is in the bear's favor right now. Even though we're below 30 on the RSI, we could pop back up on the RSI, which I think will happen, but ultimately we could bobble down here for an extended period of time. And so if we go all the way back, and we look all the way back here, when this happened before in 2015, Bitcoin broke above the 200 moving average to $321, dropped all the way down to $200, and was below the 200 moving average for what looked like 55 days. If I were to zoom in for you guys to this right here, to where you can see exactly what happened and why we might not be done yet. It was about 55 days, 57 days, give or take a few days before we broke out from this. And this was almost a double bottom, right? You saw the bottom right here in January of 2015, and then you saw another dip right here down to 195. It wasn't quite to that bottom, but it was another dip nonetheless. And then once we regained the 200 moving average, the 200 SMA acted as major support during the whole entire bull market. Now, this was key. Once we broke below and we closed below the 200 moving average, then we saw the complacency stage, really start to hit through here. And then we saw anxiety, denial, panic, capitulation, anger, and then depression. Depression was all the way down here. Now we saw a double bottom down here, but we were below the 200 moving average. So when we broke above in 2019, above the 200 moving average, we were well above it for an extended period of time. Now, when this happened, we broke below it. We were below the 200 moving average for 30 days. We tried to break above it, couldn't hold it. And then the next time it broke above it was 125 days later. So could we see something like this happen, where this rise or this rally for Bitcoin out of the RSI, the 20 whatever points we are on the RSI, we rally out of here, we go back up to almost oversold condition over the next month, 2 months. How long did it take for when Bitcoin dropped below to hit that rally? It was about 32 days. So about 1 month before we rallied above the 200 moving average. Could we see something like that happen again? What would that look like? Well, I traced that up for you guys on the chart right here, so you can be able to see it other than just my drawings right here. All right. So before we broke above, it looked something like this. Let me go ahead and erase these so we can look at this very clearly of what this looked like. Now, if I were to draw this upward trending support line right here for Bitcoin that broke to the downside, also broke to the 200 moving average, the chart would look something like this. We would stay below the 200 moving average for however long, 30 days, rally back up to this upward trending resistance right here. Simultaneously on the RSI could just bobble around here. If we saw a rally within 30 days, we'd see a spike in the RSI. If it got rejected, then it would come back down and it would look something like this. Now I do see this downward trending resistance line right here on the RSI as well too. A rise up to this and a rejection would look something like this, where we could stay, close to, 45, 50 on the RSI or under over the next few months. And then some catastrophe hits in the near future before we break out of this. But regardless, I love to give a viewpoint like this because this prepares you for worst case scenario. Because worst case scenario is we see a dip down to $12,000 to $15,000. We see something like this of what people were calling for back here. People thought Bitcoin, when it was dropping down like this, people thought Bitcoin was going to do something like this as the final capitulation event, bottom out around $10,000, then come out of here. That's what a lot of people thought. And arguably, it's justified because you look back here, that's exactly what happened during this scenario right here. Bitcoin was, going back to the 200 moving average, and, usually the worst thing that can go wrong will go wrong, and that's what dropped Bitcoin over 85%. However, that took a year. The reason why Bitcoin bears or bulls, both people were calling for the bottom, is because we were 365 days in, and historically it's been about roughly 365 days, given 1 to 3 months before the bottom's in. So if we were to see a drop, that would have pushed us beyond 400 days for a final capitulation event. So that's why the bottom was at, roughly $15,000-ish right there, and we broke out of that. But that doesn't mean that this is the ultimate low, because just like this doesn't mean that this was the ultimate high, right? For 4 years, when this was the high, this was the double top right here. This was the dead cat bounce. This was ultimately the complacency stage right here, because everyone and your grandma and your old cousins and your friends from high school were texting you right here saying stuff like, hey, what altcoin are you buying? Or, hey, you're getting messages on Instagram from old friends saying, hey, I just bought Pepe coin. I just bought Shiba Inu. What do you think about Shiba Inu? All my friends are asking me about that. I'm like, go check out our channel. We were making videos about Shiba Inu and telling you guys to be prepared. Watch out, because these tops right here, whereas a signifying factor that the markets were going to go down. Now, I thought something like this was going to happen. I thought it was going to go down right at this point, because the chart looked eerily similar to back here, where we see the complacency right here, except it was different. It faked everyone out. So just because this happened in the past doesn't mean it'll happen in the future. Just because of what happened here doesn't mean it's going to happen in the next bull market cycle. In fact, every single bull market cycle has some nuanced points that are different from the previous one. But historically, we've been following the Bitcoin 4-year halving cycle, where pre-halving years, we see massive volatility, massive dip, Bitcoin halves, right? Bitcoin halves, and then we see monetary print orders, government going crazy, people jumping back into the market, and then 2025 is looking like it's going to be the peak. But here was the key here. The complacency and the dead cat bounce for this past bull run cycle was higher than the top. So the top right here is arguably the top right here, and the complacency stage, the dead cat bounce right here, is this right here. And so this bottom right here, very, very different looking than this bottom in the final capitulation right here. Just like this 2019 rally is very, very different looking than this right here. We didn't see a final blow off top like this followed by a crash. So could it be different? I think it's going to be different. I don't think we're going to see something like COVID. It could be maybe extended. Hey, maybe the bull market top might be 2030. We'll see. We gotta look at the data, but nonetheless, it's suggesting that we are going to go into a massive bull run by 2025, 2030. So you just got to be ready in position, because an oversold RSI reading means price has dropped too quickly. That's it. While overbought reading indicates prices have rallied just quickly. So if anything, the latest below 30 or oversold reading on the RSI is a sign of strengthening bearish momentum. So as the old saying goes, indicators can stay oversold longer than dip buyers can stay solvent, because people don't understand how to dollar cost average. They just see a dip like this, and then they just put in too much money, and then it dips lower, and they don't have any more money to stay solvent to buy the dip even further. And so Bitcoin's trend has shifted bearish. It's shifted bearish with that break of the 200 moving average and that upward trending support. But over the past 5 years, so to shift gears here, over the past 5 years, most Bitcoin holders outside of the US experienced greater gains in Bitcoin due to the depreciation of their local currencies relative to the dollar as a consequence of the US interest rates going up, in addition to the 31% return of Bitcoin relative to the dollar. So you can see the orange bar for Bitcoin versus the US dollar return in comparison. It's been way stronger than the dollar. If we look right here, you guys can see over time, if I were to measure from the peak of the DXY, actually, let's go down to the low in 78, and we look at where we are now. We're only up like 26%. And this is, the dollar's actually down, but we are up on the DXY in comparison to other countries. And so right here, if I look at Bitcoin to the US dollar, a lot of people would say that Bitcoin's down, it's performing horribly, it's a bad asset class, it's a scam, when in reality, it's up over 1 million%. So over 1 million%, whereas the dollar is up, 26% from the 70s comparison to other currencies, and it's down right now. So with the dollar being down, 9-10% on the DXY, the spending power of the dollar is even worse than that with inflation and real inflation. And we see, the cost of living going up. The Federal Reserve has guaranteed that their goal is 2%. they're above that right now. So they say that their long-term goal is 2%. So they're telling you that if you had $10,000 in your savings account, you're going to lose $2,000 in spending power every single year. That's what that means. And so regardless of whether Bitcoin goes, up, down, sideways over the next year, historically, Bitcoin is going to continue to trend upwards. Now, the reason why that's important is because Bitcoin affects XRP right now. As this lawsuit extends further, if we see Bitcoin, consolidate sideways or go down, then most likely XRP would continue to trend downwards. If Bitcoin has another drop, XRP would have another drop. If Bitcoin has a breakout, XRP would have a breakout. But I'm expecting something like this to take place over the next few months leading towards the end of this year. One final liquidation event for XRP down to this upward trending support right here, a bounce off of it, and then a retest of this resistance after it. Now, hey, if XRP can break out sooner and just hold this resistance and just kind of waddle sideways before breaking out in 2024 with the Fed shift, I think the chart's going to look one of two scenarios right here. I don't think XRP is just going to break out and start doing crazy things right now because the lawsuit's still on its back. The government still hasn't pivoted. They're not printing money right now. The recession is still on the horizon, as it builds up and people start wondering which bank is going to crash next, which bank is going to run. But overall, these companies are preparing and you have to be ready. And one company that's preparing massively is an e-commerce giant named Shopify. They added Solana Pay to its pool of options for payment, allowing millions of merchants to use the platform to accept crypto transactions, kicking off with USDC. And according to TechCrunch, Solana plans to add other altcoins to its platform in the coming months, including Solana as well, rather than just the stablecoin. So when we look right here, when I talk about trends, I want to show you guys trends. So look at the keyword Shopify on Google Trends. It's become very, very popular all the way since 2004. It's trending upwards. So Shopify's chart in terms of social interest is bullish. The reason why a chart like Bitcoin looks like this compared to the US dollar trending downwards is because Bitcoin's chart is based on search volume. People, it's the people's currency, right? Gold is God's money. Fiat currency, the US dollar, is government money, and crypto is the people's money. So people's money, when you understand search volume on Google, this is people's interest, attention. Where attention goes, energy flows. That's why energy is the currency of the universe. So energy is based on keywords, what people are searching, where their consciousness is focused on. So when we compare this to crypto, Shopify to crypto right here, so we can see that crypto was blowing Shopify out of the water from May 9th to May 15th, but they're pretty equal right now, running neck and neck. Now, one thing that's interesting to know, and the reason why the all-time high for Bitcoin was the dead cat bounce in the complacency stage is because the all-time high was actually lower than the first peak for Bitcoin, meaning that this is when people were the most excited about crypto. And then by the time Bitcoin passed that, people were getting out of the market at that stage, and that was complacency right there. And so if we were to compare Shopify to crypto over the past 12 months, that's the past 5 years, we can see that they're neck and neck right now. So as more interest gets into the e-commerce space, now let's compare this to e-commerce because Shopify, is a subsector of e-commerce. But it's interesting, more people know about Shopify than they do about e-commerce. But let's look at something like Amazon. Now, if Amazon does something with crypto, game over. Amazon blows everything out of the water. And so what's going to happen here, this is my theory, okay? Let me know if you agree by liking this video. If you disagree, then subscribe to the channel, leave a comment below, and I love reading all the comments and seeing what your guys' thoughts are. But Shopify estimates that 10% of all e-commerce transactions in the United States, or $444 billion of the world's e-commerce market, are made through its platform. So market share is the key phrase here, because other companies are going to start to realize that, if Shopify's doing it, we got to do it too to compete. So you're going to see a domino effect take place in the e-commerce space of all these platforms starting to accept crypto for their creators. And it's going to be an e-commerce crypto craze for this next bull run cycle, combined with, metaverse projects, combined with banking projects. And you see Solana right here sitting at $21, not too oversold on the RSI, a little bit below 50. But if we were to see Bitcoin dip one more time, Solana might see a double bottom as well too, and fake everyone out and then recover from this and go back into the bull run. So, I'm bullish on Solana right now. I'm indifferent. I'm impartial. I'm kind of neutral right now. I don't know what's going to happen next. If I told you exactly what would happen, Probably won't happen, but what I can tell you is over the next 5 years, I'm a macro market investor, and knowing that, looking at something like Litecoin as well too, you see this upward trending support, I could see the altcoin market coming down a little bit further before we see a spring, because we see Litecoin on the monthly sitting at 43 on the RSI. It could drop a little bit lower, and while Bitcoin does relatively decent, the altcoin market could bleed out one final time before breaking out of here. And so that's why you got to have dry capital to deploy, to be ready to deploy. And as always, you know what we're doing? We're backing up our truck all the way to the bank, grabbing the bags, packing them, stacking them, leaving no bags left behind, because we believe the spending power of the dollar is going down in value. That's the truth. Blockchain technology is going up, and that's a fact. And together, we're all going camping on the beaches of the moon. I will see you on the next video. I will see you on bullrunners.com. If you want to plug into our private Telegram or private Facebook group, the links will be in the description below. As always, you know what to do. Stay bullish.